Hello and welcome to another Wealth of Advice market update on the 11th of June 2021. I just want to start this week's update by talking about something which, if you look on the screen now, does look quite negative, but we're starting to hear more and more either in the press or in our own office, emails that we're receiving. There seems to be more scams going on out there. My mother rang me a couple of days ago telling me she'd had a text message from HSBC saying there was a problem with her account. She's never banked with HSBC in her life, but she was still wondering whether she should have rang the number. If you receive anything which just doesn't seem right, we're here to answer any questions. We're here to help. Thankfully, none of our clients, to our knowledge, have ever been the victim of a scam, and that's hopefully because clients will get in touch with us if they want to withdraw any money from their pensions or investments. And if we are processing any withdrawals from pensions and investments, you can be rest assured that that money will only ever go to the bank accounts which was linked directly when you set it up. And those bank accounts can only ever be changed if we receive physical evidence from yourselves of new accounts. So we've got hundreds of millions, well, 150 million pounds of clients' money invested in total across a wide range of product providers. We are aware of what's going on. We do keep our eyes open to all of these things, but as I say, we just thought we'd put this on just to remind people that we think that it's starting to go up. I mean, there was a story in America last week where these ransomware things are happening, where these people are taking over computer systems and they're forcing people to pay money. Quite scary stuff. That's obviously at a much bigger scale where millions of pounds is involved. But down at our level where clients have got investments and pensions, we need to keep an eye on it. So we have created a guide to scams, which we're going to send across with this video, I believe. So it should be in this email that we've sent across to you today. But like I say, if anyone has any questions, any queries, just get in touch. So now getting on to the market update. The news that's been mostly in the press over the last few days has been the G7 meeting that's taken place in Cornwall this week. And the big news story to come out of that was an agreement that all countries are going to start charging a minimum rate of corporation tax. This will avoid all your big tech companies hiding in low tax jurisdictions, basically not paying any corporation tax, which has been seen as a huge problem the world over. You've got a company like Amazon who makes billions in the UK but doesn't pay much corporation tax, if any, here. So this is hopefully a way around that. Let's see if it works. There's been some negative stories on the back of it saying in a lot of instances it'll bring down corporation tax in some countries, but overall I think it's a positive story. And what it has meant is that the large tech companies in the US have actually been held to account, and Biden, who's come on board as president, has actually accepted this. Whether Trump would have accepted the same, you don't know, but it's certainly, I think, a positive thing that we are starting to see, and it has come at a time where it's not going to disrupt these US technology giants, so hopefully their efficiency and their output stays the same. In the UK, away from the G7 summit this week, there has been talk that we might delay lifting the rest of the COVID restrictions that are still in place. There's an official announcement next week. Again, looking at this from an investment point of view, my concern would be how will the markets react to that. We've said all along that markets have risen nicely on the back of we're coming out of lockdown, we're getting everyone vaccinated. So how will markets react? Well, in the last couple of days, markets haven't gone down. Markets are still going up nicely. So you may have heard us previously talk about what was going on in America. So the latest that's going on over there isn't as positive as perhaps you might hope. When Biden came in, he managed to pass through a $3 trillion deal to obviously get the country moving after COVID. 2.3 trillion of that was a proposed infrastructure plan, which was going to be partly funded by increasing corporate taxes from 21% to 28%. So far, the Republicans have only agreed to part of that deal going through, and the rest of it is going to need more spending. And as I say, Biden is now at a pinch point to try and get this through. So it's not really going as quickly as we'd like. Had all that spending gone through, you would have seen a big increase in what's going on in America, and that would have been very positive for the markets. So now we're getting through the honeymoon period of what Biden's new presidency's seen, and he's seen problems in the House that he can't get certain things pushed through. One good thing though, he's not reducing Trump's pressure that was being placed on China in respect of the trade wars that we saw a few years ago. When I say that's good, it's the fact that they're wanting to make sure no one has an unfair advantage, and they have announced a new strike force to tackle unfair competitors like China. So again, we'll watch as to how that's going to unfold in the coming weeks and months, and that may in itself bring some market volatility. So now come to that section where we look at how the various markets around the world have performed. And as you can see on the graph in front of you now, Markets have generally performed positively over the last few weeks and months. The general trend is up over, which is good. The FTSE 100 since January of this year is up 11.68%. Which is clearly the best performing indices you can see on there. That's the blue line at the top. The worst performer there at the bottom, the red one, is the MSCI World Index, with the US one just a little way above that. If we look at the total performance over 12 months, that goes back to June 2020. The FTSE 100 is not as well performed as the other two. You can clearly see that the MSCI and the World Index are kind of tracking each other. But again, look back to November when the vaccine was announced, how the FTSE jumped at that point, and we are nicely catching those up. Stretch this out over 5 years and it becomes more interesting. The FTSE 100 over that period of time is up like 38.83%, whereas the S&P is up over 119%. Again, that's the effect of big technology companies in America booming over that period of time. But we still have that situation going back to, I mean, it is 5 years now this month since we actually voted for Brexit, that the UK market is still depressed, and it's the worst market there, the bottom, lagging way behind, because everyone wanted to see what was going to happen with the UK, whether we got a Brexit deal or not. We're now at that point where we've got the deal, we're out the other side. We did a presentation update about the first 100 days of Brexit. One client sent an email back which was absolutely bang on. We're not going to know how Brexit's going to affect us for a couple of years yet, so hopefully over the next few years you will see the FTSE 100 catch up over the longer term. But again, looking at that there, this shows also why it pays to have an investment portfolio with a multi-asset, country approach, where we invest your assets all over the world, which as I say, we do. Now some updates from fund managers who we've spoken to over the last couple of weeks. I said previously we're getting more and more contact with fund managers. On Monday we spoke with Torquil Stewart, who is the manager of the Baillie Gifford Strategic Bond Fund. This is not even a fund that we use at the moment. It's something that's on our watch list. We may be considering putting into client portfolios in the coming months. And part of this process is to speak with the main fund manager, as I say, which we did on Monday. It was very interesting speaking to him. Bond markets have had a very volatile period over the last 6-12 months, but he's happy with how his funds have performed and how bonds have performed in general. He said the amount of bonds that have actually defaulted during the COVID crisis hasn't been high at all. It's been very low. Again, think back to January, February, March of last year when the news stories started getting worse and worse. We were expecting lots of companies to go bust the world over, and it just never happened. We spoke about inflation on previous updates, and he confirmed that if we do have this record consumer spending in the summer months and a bottleneck in the supply chain for all the manufacturing industries, and we are hearing that even from companies in the local area who it's difficult to get parts in to make these goods, you will see some short-term inflation. So keep an eye on the price of goods, price of food, price of diesel, petrol that you put in the car. Inflation is expected to come back. I don't think it's such a bad thing in the short term, but just need to see what it's going to be like in the long term. Unemployment is coming down, which is good, but we need to see actually where that ends. So this fund manager was very positive as to what overall bond funds are going to look like in the second half of this year, maybe beyond, which is reassuring given what was happening in the early part of the year with bonds. Another fund manager who we spoke to recently was Trevor Greetham. We have lots of clients who are invested in the Royal London portfolios. We will do a separate update for those clients who are invested with Royal London to this update. But again, just talking to Trevor, he is positive, like the bond fund manager was, that the second half of 2021 is going to see strong economic growth, and there's lots to be positive about as we move into 2022. And the US is going to probably get back to pre-crisis output levels later this year, whereas Europe might lag a little bit behind. So let's see if that happens. But as I say, we'll do a separate update on the Royal London portfolios for those clients after this one. So thanks for listening to another Wealth of Advice market update. We hope you found it useful and informative. And as usual, if anyone wants to get in touch with any further questions, please don't hesitate to do so. Thank you.